My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to a very special countdown to kickoff. I'm coming to you from Chiefs Kingdom, eve of Super Wildcard Weekend on NBC and Peacock. Taylor Swift is the 12th man edition of Mad Money. I'll be one of my friends just trying to make you some money. My job is not just to entertain, but to educate and teach you. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. Sometimes when you come in too hot, you pay the price. And that's how I feel about the big bank stocks today, which simply couldn't measure up when we saw the results. I like to analogize to football. As you know, I do it a lot. And the analogies break down when we talk about coming in too hot, though, don't they? Because can you really come in too hot when you have a playoff game in Kansas City where it's going to be -5 tomorrow night? Something you'll see if you tune in to Peacock at 8 p.m. Eastern. We're out here to take the measure of the game in the business of sports. But this is Mad Money, not Mad Sports. And earlier this week, I said that if we didn't get blowout quarters from the major banks, the market would stall out. That's exactly what happened today. Dow dipping 118 points, S&P advancing 0.08%, and the NASDAQ edging up 0.02%. Look, the day started pretty good with a very solid quarter, or at least it looked to be from J.P. Morgan, the bellwether. Plus, we had a nice cooler-than-expected producer price index number, making the setup seem, I'd say, darn right benign. Citi, Bank of America, to a lesser extent, Wells Fargo put up good numbers, good enough that I didn't think it would matter that their stocks came in too hot. Wrong. Even as J.P. Morgan opened strong, the group couldn't hold up under pressure, and a stock that initially ran up 7 points actually closed down $1. As investors said, the story played out, unless we start seeing quick rate cuts, of course. I wouldn't bet on that. So what happens every time a leadership group shows less leadership? Well, the money flows right back into tech, with Microsoft this time being the standout. That stock finished up $3.84 based on, well, nothing. But it was enough to pass Apple for the crown of the largest company on earth by market capitalization. Now, if you're wondering what the heck I'm doing here, it should be self-explanatory. The Dolphins coming to the Chiefs right here at Chiefs Kingdom at the GEHA Field at Arrowhead Stadium. And that's tomorrow night. You can watch it on Peacock along with 2 other wildcard games from NBC. And as a big fan of Coach Andy Reid from his Philly days, I can tell you I'm not rooting for the Finns when I do a little pregame action tomorrow afternoon, which I am very excited about. Before we get to next week's game plan, let me just say that I got a call this week from the red-hot Larry Williams, the market historian/technician whom I respect so much. He flashed me some charts to show that Bitcoin is putting in a major top here. Sell. We know that it ran up for the launch of this new exchange-traded product, and now he thinks it's headed for a nasty sell-off. I'll go into more details later, but I wanted to bring this up right at the beginning because I have rarely seen Larry so adamant and sure about this kind of call. Now let's talk about what's coming next week. We have tons of bank earnings still ahead of us, but we can't forget that the banks trade as a function of interest rates and how many times the Fed might cut this year. That's why we have to pay close attention to what Fed Governor Chris Waller is going to tell us on Tuesday. Now, he's been the most vocal Fed head when it comes to flat out saying that it might, let's say we're done raising interest rates, and instead cuts are on the way. After a hotter-than-expected consumer price index reading, followed by a cooler-than-expected producer price index, I want to know where we stand. Hey, maybe you'll give us some insight. We could use it. For the opening on Tuesday, we get results from Goldman Sachs and Morgan Stanley, the 2 top investment banks. Goldman's cutting expenses, and I believe they'll tell about how a resurgent market for takeovers and a bountiful bond issuance is bringing in a lot of money. Much better time to be an investment bank. We own Morgan Stanley for the Charitable Trust, but last quarter, wow, they reported a widely panned number because their wealth management business didn't put up any growth. The stock got crushed. I wonder if new CEO Ted Pitt can change that negative narrative, or maybe they just got in some more wealth management. That would help things. One bank that can never seem to do any wrong in the eyes of Wall Street is PNC Financial. Humdrum. Now, there's no such thing as a sure thing in this business, but PNC might be as close as it gets to clockwork bullish equity, even when I don't think it should be. Wednesday morning, we hear from Charles Schwab. Not that long ago, the stock was on its heels because people were frightened about its bond portfolio. They thought it looked too similar to the regional banks that went under last spring, even though Schwab's a brokerage firm. I disagreed vehemently, and I told you to buy it, and now I feel vindicated because the stock's crushing it. I think Schwab will tell a terrific story next week, and the investor is back. Now, there was a time a decade ago where Kinder Morgan, a giant pipeline company, was the belle of the ball. It was the blue chip of the group. Then it stumbled. The stock never really recovered until now. I think KMI has its act together. When it reports Wednesday night, I'm betting we get a pleasant surprise from the 6% yielder. Thursday, we get results from one of my absolute favorite regional banks. It's First Horizon, and I want to own this one. This was the jilted regional that was about to be taken over by Toronto Dominion at $25 a share. But then the regulator somehow blocked the deal, and the stock collapsed. Now it's at $13. Yeah, I think that's a buy. You want to read on the economy? Let's tune in to J.B. Hunt's call Thursday night, because this trucking company really does go over every aspect of commerce. And it's always, I'd say, both enlightening and entertaining. Darn good stock, too. Finally, on Friday, we hear from SLB. Yeah, the old Schlumberger, the oil service giant. With oil spiking today off the Red Sea troubles, does that mean oil companies will open their wallets for big-time offshore drilling? How are the producers doing with all this new technology that allows them to get more crude out of the ground with less money and fewer rigs? Is SLB still the blue chip of the group? Can there be a blue chip of the group? We'll get all our questions answered. Plus, Dow Jones Industrial Average component travelers, don't talk enough about it, also reports. And this insurance companies really matters. Why? Because the steady rise in your insurance rates has played havoc with the consumer price index. It was the leading cause of the irritatingly overheated number we saw this week other than Ren. Is there any chance that the old insurance price wars could start up again? Or has the industry become too disciplined? And that's going to be bad for you and me. Travelers tends to be pretty upbeat and upfront about the business. Let's pay attention. Bottom line, it is a tumultuous moment. We've already had a big run in healthcare and the banks, while tech's taking a backseat to no one until today. Could it roll over like Bitcoin? We took some techs off the table for the charitable trust at the beginning of the year. Let's just say I do not regret it. And stay tuned later in the show for that work that enabled Larry Williams to call a major top in Bitcoin. You will not regret that one either. Let's go to Elizabeth in Florida. Elizabeth.
Hi, Jim. How are you?
I am good. How about you?
Good. So I have some thoughts on American Express. It's been down for the last 2 weeks. What are your thoughts, and if it's a good time to buy now?
Okay, Steve Square reports next week. He's the CEO. I think it's a terrific company. It did go from 169 very quickly to 189. It picked up those points in a heartbeat. Therefore, I think it's two in the middle of the range. I don't want to recommend it. Instead, I want to hear what Steve has to say. He's a straight shooter. Let's go to Chase in South Carolina. Chase.
Booyah, Jim. How you doing today? Wishing you a great
doing well.
weekend.
How about you, man?
I was interested in how you felt about Campbell's soup these days.
Not enough upside. I think the company's doing well. I think that Mark Klaus has got as best a hand as he can have. But the hand in the end is not going to be a full house. Why? Because it's packaged processed foods, and they don't fare well in a new world of GLP-1s. It's a tumultuous moment. We've already had a big run in healthcare and the banks, while tech's taking a back seat until today. And could it roll over like Bitcoin? Time was going to tell. Well, man, money today. Are you ready for some football, Cramerica? I'm coming to you from GEHA Field at Arrowhead Stadium ahead of tomorrow's Dolphins-Chiefs wild card game on Peacock, and going straight to the source, talking to Kansas City Chiefs owner Clark Hunt about the business of football. Then, as I was reviewing this weekend's slate of 6 games and the 14 teams that made the playoffs, I realized many of them are reminiscent of my favorite stocks. I'm going to give you my comparisons. Plus, NBC Universal is home to a record 3 NFL playoff games on Super Wild Card Weekend. I've got the exclusive with the team from Football Night in America. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.